If you've ever thought about buying something or investing in something so that you can claim a tax deduction, reduce your tax, or potentially bring your income down to a lower tax bracket, then this video is 100% for you. Because in this video, we are going to look at how tax deductions actually work so you can work out whether or not it makes financial sense for you. G'day there, my name is Phil McGilvray. I'm the founder of the Money Boss Academy, where we make practical, life-changing financial education both understandable and accessible for everyday people. And today I'm going to share with you a story from James, a client that I met with on Friday. James referred to me early last week. And he was desperate to get in for an appointment because he's starting a new job today. That new job comes with a significantly higher salary. And with that salary comes a eye-watering big tax bill. He's very concerned about this and he wants to find ways to reduce his tax. His pay team has suggested to him, well, had you thought about getting a novated lease or a lease for a new Tesla so that you can reduce your tax? So he wanted to come and see me so that he could understand the pros and cons and make a wise decision. So on the screen here, we have a spreadsheet. But before I get into the spreadsheet, I just want to quickly summarize what a novated lease is. It's where you can buy a car, you get a loan for that car, and included with the repayments on the car, they include things like your registration, your insurance, your maintenance, your tires, etc. All bundled up into just one payment, and you can claim a tax deduction for some or all of that. But the idea is that you've got this new car, it's a tax deduction, and it's all just one simple payment, which sounds great in theory. So let's have a look at the numbers as they would be for James. Okay. So as I said, first let's go through what it would look like, what James's take-home pay would look like if he didn't get a lease. And then let's have a look at what his pay would look like if he did get a lease. Okay, so first one is his income, his gross income before he's paid any tax or anything like that is $221,000. Because he is contracting, he's basically self-employed, which means that he's going to put $30,000 of that money into superannuation, and he can claim a tax deduction for that. That's his concessional superannuation that he can claim a tax deduction for. So he's not got a lease in this scenario. So what that means is that his taxable income, what the government's going to tax him on, so $221,000 minus his superannuation, he's left with $191,000. That means he has to pay an eye-watering $52,000, which I can understand that he doesn't want to have to pay all that if he can avoid it. There's no tax saving here because he hasn't got the lease. So that means his after-tax income is going to be about $138,000. That's what he gets to take home, which is about $11,576 per month. Now, because he doesn't have a car lease, we're assuming that he still has to pay the car registration, the insurance, the maintenance, the tires on his existing car. So that's $300. And let's just say he uses $700. He does 700 Ks in his car each month, which equates to about $110 in petrol. So what that means is after his car expenses have been factored in, he has a take-home pay of $11,166. So that's what he gets to keep after he's, after we factored in the car expenses, just so we're comparing apples with apples here. Okay, so let's have a look at the scenario now if he does get a lease. So we can see here he's got the $221,000, same income, same amount going to superannuation, but now he's putting $16,800 into buying this new Tesla. So that $16,800 is $1,400 a month. That includes the repayments on the Tesla, so the loan repayments. It includes the car registration, the insurance, the maintenance, the tires. All of that's bundled up into that payment. So that means that he's spending $16,800 a year on this Tesla. the tax payable, therefore, so if we go 221 minus 30 minus 16,800, his taxable income comes down to 174,200. So $16,800 less than 191,000 is taxable there. And that means he does reduce his tax. Woohoo! His tax is now $45,791, not $52,000. His tax saving is $6,296. Now, this is what James was focused on. He was focused on, yes, I've saved myself $6,296. Fantastic. But he had to spend $16,800 in the first place to get that $6,296 tax deduction. So that is like you giving me, I said this to James, this is like you giving me $1 and I'm giving you 37 cents back. I would play that game with you every single day. You keep giving me $1, I keep giving you 37 cents back. I'm hoping that you can see in this scenario that James is losing money because he bought the Tesla. If we look further down here, we can see his income after tax is $128,408, which means he has a take home of $10,700. So that's $875 less that he gets to keep because he has bought the Tesla. Now, to make an apples to apples comparison, if we do factor in the $300 per month it costs him to run his current car, plus $110 per month he spends on petrol, and we replace that with, well, those costs are all factored in up here, and there's about $20 in electricity. If we come down here, you can see that difference is probably closer to $585 per month. That is still a significant sum of money. He is giving away that $485. The only way that getting a Tesla to reduce his tax actually makes sense is if he really needs a Tesla. If his existing car has died and he's sold on the idea of an electric car, then this makes sense. So he would then say, okay, is me having a new car worth the $485? I'm going to be worse off in my pay every single month. Again, I hope I'm not overcomplicating this. James is basically giving away $1 to get 37 cents back as a tax deduction. So the question he has to ask himself is, do I really need a Tesla? Do I really need a Tesla? Is my old car run down? I need to replace it. Do I need this Tesla? And as it turns out, James doesn't need a Tesla. He's got a car and a couple of motorbikes that he loves driving. They're in perfectly good condition. He doesn't need a Tesla. The only reason he's thinking about this is because he wanted a tax deduction, in which case he is literally throwing away $485 every single month. And I showed him, I said to him, James, let's have a look at the mortgage calculator here. At the moment, you have a loan of $373,000. You've got your 8 years in, so you've got 22 years to go, which is about 264 months to go. Your interest rate's about 6.2%. Let's just say we pay this $485 instead of throwing it at a Tesla that we don't need to get a tax deduction. Let's take this extra $485 and let's pay it off your mortgage. And you can see here that if we did that, he's going to pay his mortgage off 6 years, 1 month faster, and save himself almost $100,000 in interest. $100,000 in interest. At Money Boss, we're always about helping people make smart financial decisions. Decisions that literally move the needle. And I truly believe, and this is why I'm so passionate about what I do, is that there are small decisions that we all make in our lives, just as everyday people, that make $1 million difference at the end of the day. Now, for James, this is one of those. This simple decision, do I chase the tax deduction, or do I actually look at the numbers and work out what this is really going to cost me and make the decision based on that? For James, he's going to be that at least $485 better off if he doesn't take the lease and put that money off his mortgage, or it could be that he invests it into an index fund for the long term. But these decisions have an impact that reverberate through the next 10, 20, 30 years. So I'm hoping this has made total sense to you. It's not just this same scenario applies to whether you're buying tools for work, or whether you're investing in a new educational course, or whether you're buying an investment. You have to ask yourself, is this a good investment for me? Like, am I buying this because I want the thing, I need the thing? Not I'm getting a tax deduction. You should never invest or buy something simply because you get a tax deduction, because for every dollar you give away, you're only getting 20, 30, 40 cents back. I hope that makes sense. If you've got any questions, please don't hesitate to reach out to me. And I look forward to seeing you in the next video.